Welcome one, welcome all to the node. I am Mike, aka Veteran Crypto, and with me as always is David. How's it going, brother?
Good morning, Mike. Doing well this morning, man. Well, afternoon for me, 12:01, but still kind of morning. Doing really, really well, man. I saw that ETH market over on Aave got opened back up today.
Oh, nice, nice. So they unfroze all that?
Looks like they just unfroze the ETH market. But something that I've been really interested in is the way that the attackers are laundering the proceeds. And that's something that I want to, at some point today, dive into
I get,
because,
oh,
yeah,
go,
interesting.
go.
Interesting. So it looks like what they're doing is they're using something called Rune or Thor chain.
Mm-hmm.
And apparently, there are, and I didn't know this until this morning. And so, this is what I want to dig into. Apparently, on Thorchain, there are atomic swaps between Ethereum, Bitcoin, and Monero. So, I really want to dig into that because an atomic ETH BTC XMR swap, that's pretty darn cool. I want to see if we can test that out today, too.
Oh no, absolutely. So before we get going, let me dive into the socials real quick, just so we can show off the new website. Let's see. So actually, let me switch this up so the QR code. Actually, I'll just take the QR code off for a minute. There we go. All right. So if you want to join the conversation, come on over to YouTube, and you can find us at the Node Network, all one word, and you can find all of our channels. So we are truly a network. We have 7 different shows. So you're watching the Node that goes on Monday through Friday at 9 a.m. to 11 a.m. Pacific. Crypto and Chill Tuesdays and Fridays. So tonight at 5 p.m. And that's where me and Jeff just kind of get into the the crypto news since the previous episode. And usually we just kind of relax and just kind of bullshit and just kind of a way to unwind at the end of the day. We got the blockchain report Monday, Wednesday, and Thursday. That's where Jeff gets into deep dives on early projects and potential airdrops if you want to earn free crypto. It's a way that he's actually made a little bit of money in the past. Sovereign Soil. I did another episode last night. This is basically emergency preparedness and a homesteading show. So I shared my decades of experience, in both those areas. And last night, I actually shared a bunch of pictures and my with buying my 20-acre property and living in a tent and building my cabin myself. Actually building it myself. I didn't hire somebody to do it. I built it with my own 2 hands. So just shared a bunch of pictures of clearing the site and pouring the footings and the foundation and the framing and just all the different aspects that come with it that almost were pitfalls that that almost derailed my whole project. One of them that really wouldn't think, but the septic system. I almost wasn't able to get a septic permit. So it would have been very interesting to have a cabinet with no septic system. Um, then you have the daily market wrap. That is Monday through Friday at 1 p.m. Pacific, 4 p.m. Eastern. That's where David goes into the basically kind of what happened during that trading day. Goes over about 15 to 20 minutes of charts on stocks, crypto, different projects. And on Tuesdays and Thursdays, so this afternoon, he will be going showing his a one-on-one coaching program. And so we chose a member of our community, Ellie, who's in the chat right now, to take her through his coaching program live on the show to show what all that entails. So we have that.
And so, Mike, today, in light of everything that's happened with Aave blowing up and utilization rates going to 100%, the yields going out the window, today I want to see if me and Ellie, if we can actually like run an interest rate arb on maybe even on Aave. So that could be kind of interesting today.
Yeah, no, absolutely. I'll definitely be there behind the scenes running the sticks for that one. We got Saturday Night Fever. Saturday at 6 p.m. That's where Jeff, he's a DJ. He lives in the Bay Area. and has started to do interviews with a bunch of other DJs in the area and does tutorials. And sometimes, they just spin music. So, if you're interested in that style of music, that is a great show to catch. The Red Pill on Thursday evenings at 6 p.m. That's where about, usually about 4 or 5, sometimes 6 of us get together and we just talk about, hot button issues, stuff that, people aren't, are supposed to avoid these days, like politics, religion, relationships. And we show, I mean, we get drunk while we're doing it. And it gets heated sometimes, but we show that adults can get together, they can discuss complex topics, argue, scream, yell, and at the end of the day, still be friends. So, it's okay to have differing opinions. We actually encourage that here at the Node. We like to hear the pros and the cons, different points of view, so that we can better round out our thesis or our views on different show projects, life, religion, politics, whatever. I was actually in a conversation, a little off topic. Oh, it's on topic. I've been in a conversation with Dagnum, who we've had on the show for interviews a couple of times, and I've been asking him, why is it that people should buy the DAG token? Simple question. And of course that's why we invest in these assets is we are hoping to get a return on investment. And so it's important for us to ask these questions of, how do we as token holders benefit or profit from the success of the company that issues the token? As they offer, services to their clients, and it, through the tokenomics or however all that works, it generates revenue through fees or whatnot. We as token holders share in that profitability. It's a very simple question that anybody that runs a project or is part of a project should be able to answer. And we asked him, on the last, you can go back and watch on the last interview we did, and I didn't feel like we got a clear answer. And so I've been asking him on social media a couple of times, kind of giving him an opportunity to really answer the question, and he seems to take offense to it for some reason, and it caused enough concern to me where personally, I'm not saying sell your DAG tokens, do your own research, but it was of concern enough to me to where I actually sold my DAG tokens, because from what I can tell, the only way, let me pull it up real quick. Let's see. Here we go. So basically, the answer is, is that you can stake for 3 to 5%, and then through their tokenomics, they have a buyback and burn logic through snapshot fees from these institutions and things adopting them. So through adoption, potentially, it can decrease the amount of tokens in circulation and hopefully make the price go up. Super simple answer. I don't understand why that was so difficult. And I'm kind of poking fun a little bit. I did the easy button, but I just don't understand why this was such a hard question to answer. So anyway, like I said, not trying to be disparaging or anything to Dagnum. He's a great guy, super knowledgeable, and they have a great technology. DAG is is a great technology that's been adopted by the United States Air Force and Space Force, and it's
but has it really though? Has it really? Like
that's
verify, don't trust.
What's that?
Verify, don't trust. Like that's my motto. So like for something like DAG, dude, I don't I don't see the value proposition at all. Verify, don't trust. That's the way I think about it.
No, absolutely, absolutely. But again, just through my research, there is real adoption. I just don't see the value proposition. I
Right.
don't see, and that's why I sold my tokens. Is 3 to 5% staking just doesn't do it for me. I mean, that's not even keeping up with inflation. I might as well go out and buy a bond with almost with little to no risk than buy a speculative token to earn 3 to 5%. You know what I
I
mean?
don't know. Bonds have a lot of risk. I don't think
Well,
bonds are low risk. And also, we're talking about two different worlds. So, like, if you're talking about staking your DAG, well, what if DAG is inflationary to the tune of 10%, and you're staking for 3 to 5? Like,
I don't believe. I mean,
I just made that up just as an
yeah, yeah.
example. Yeah.
No. I'm just saying in this specific instance, buying a treasury bond, you can earn between 3 and 5%, and it's it's pegged to the dollar. At least it's correlated with the dollar. Whereas the DAG token, I mean, it's I've seen it go up to 8 cents, and I think now it's like below a cent.
So yeah,
Um,
the way I think about bonds is that if you buy a bond paying you 3.5 or even 4%, then you're locking in a loss by buying that bond. Because if the dollar depreciates by 7% per annum and you're earning 4, then you're locking in a 3-point loss each year by
yeah,
buying that bond. Yeah.
no, absolutely. But if I'm going to earn 3 to 5%, and I'm looking, I picked that because it's about the same as what you earn with staking DAG. I would rather have less token, or less volatility, because the token is fluctuating. What I'm earning is fluctuating, whereas with the bond, at least what I'm getting paid is the US dollar. It's like, yeah, I'm losing money relative to inflation, but if I'm going to lose money relative to inflation, I'm going to do it with a bond rather than a volatile, crypto token. You know what I mean? That's my only point.
Yeah, they call bonds return-free risk for a
Yeah.
reason. Or
Yeah.
here's another nickname, toxic sludge.
Yeah.
Oh,
I'm not saying go out and buy a bond. I'm using it as an example because it's a
I
similar
know.
return.
I know. I'm just poking fun. I think bonds are garbage.
I think so too.
Yeah.
But it's just like I said. I picked it because it's kind of an apples to apples.
Oh, and by the way, Mike, I got the admin panel working again just now. So basically, that just means that all of the research, we can post the research links again.
Oh, nice, nice. So yeah, I'll have to start doing that starting tomorrow. So David's been hard at work on the website and our AI agents, for our socials and stuff like that. I can't wait to see, once the
Oh, bro,
socials.
it's gonna be just so. I gotta tell you just real quick.
Uh,
Over the last 2 days of using the Steven Socials bot on DeFi, and the Steven Socials bot will be ready to rock and roll today, probably during our call, depending on how much work I'm able to get done in Cursor behind the scenes. But the Steven Socials bot took DeFi from 0 views. I hadn't posted in DeFi any of the channels for like maybe 60 days or so.
mhm.
So no posting, no nothing. It was getting 0 views. Okay. I post, and in the first post, the way that it works is it posts once and then it drips it out over the next 5 hours. So after the first one went from 0 to 2,000 views, and then the second day went from 2,000 to 5,000, and then the
Mhm.
third day went from 5,000 to 10,000. And so I
Yeah.
just went from 0 to 10,000 views in 3 days using that Steven Socials bot, and it's just like, wow, man. And so now we're gonna apply this to the node, dude. So it's cool.
Well, and I think it's going to have a much greater effect, just with this sheer amount of of posting that we do, with all the different channels.
I
So
think so too.
yeah. All right. So as you can see here, the Node.pro, this is our official website. David did a total overhaul to it. So instead of having, and I love this look a lot more. Before there was the live, there was, this is what it looked like, before. And so we wanted to give it a cleaner look because we wanted to put our best foot forward. And we want, obviously people to, watch on YouTube so they can join the conversation. But here, this puts front and center our no cost education. So we have a full university of beginner, all the way up to advanced, to where you can learn about crypto, TradFi, the traditional banking system, DeFi, beginner strategies, advanced strategies, all of that at no cost. There is no catches. It isn't you get the first couple, for no cost, and then you have to sign up and pay. Nothing like that. This is a no cost, course. Now, once you get to the end of it, if you want to take it to the next level, we do have paid services. David has his one-on-one coaching. That's what he's doing with Ellie on Tuesdays and Thursdays on the afternoon show, the market wrap show, and he's showing where he fine tunes what people have learned. And it's not something you have to do. I mean, you can make some mistakes, after you go through the university, you can, try your hand at it and start small and, make small mistakes. And then as you, get more competent, then you can, kind of start to invest more and more, as you're comfortable. But if you want to get up to speed faster and learn, have a mentor and learn from somebody else's, years and years and years of experience, that's what David offers in that coaching, to where he teaches you to avoid all the mistakes. And, obviously it's investing. There's always going to be risks, but you're not going to make stupid mistakes like some individual did not too long ago, where they lost $54 million due to slippage from trying to do a swap on their smartphone. That was all over the news. So,
I mean, so that one, Mike, that one was kind of funky. That was either a retard or someone engaged in some type of money laundering. I think one of the two.
Well, I don't think that they were retarded, because they had $54 million to lose. But
I mean,
it wasn't. I'll give you that. It wasn't that bright of them to be trying to do a swap on a smartphone of that magnitude. Like, I don't know if I would do a couple of $100. I hate doing any sort of DeFi or anything on my phone. And it's a lot more secure.
I don't do any, like, the only DeFi I'll do on my phone is like $50 on Polymarket betting on a game in a bar. Like, that's it. Yeah.
I mean, something small like that. I'm so paranoid about my phone. I just don't feel like it's as secure as, I don't take care of it as, as far as best practices on like things I click on and stuff like that, like I do my laptop. I mean, there is very specific things that I do with and don't do with my laptop, whereas my phone is, like freaking, I'll visit questionable sites and do all kinds of crazy stuff, and so I don't do any crypto stuff on my phone.
Well, so the way that I do it is I isolate stuff.
There's basically,
yeah. So SIM swaps are crazy, man. I watched a video of these teenagers being interviewed about how they, go about hacking Coinbase accounts. Really, really interesting. The last piece of the pie is usually a SIM swap, because people don't understand that getting a text message on your phone for a 2FA is not secure. I use hardware keys for everything, and I isolate everything. So you literally can't sign a message or do anything without a piece of hardware.
Well, and it's important that people understand what a SIM swap is and how easy it is. So, whatever carrier you use, pretty much any employee can make a copy of your SIM card and basically clone your phone, and basically, and do all the things that you can do on your phone. So, I actually called, and a lot of the employees don't even know about this. I had to call and not argue, but I had to go back and forth with one of their customer service agents, because I told them I wanted to put a lock on my phone to where no SIM cards can be generated without, me physically being in a store. And they're like, "Oh no, we don't do that. I've never heard of that." And I'm like, "Yes, you do. And if you don't know how to do it, please put me in contact, transfer me to somebody in your tech assist." And finally they did. And as soon as I got to the tech assist, he's like, "Oh yeah, absolutely, we can do that." Most of the customer service agents don't know about this or understand it, because crypto is relatively new and that sort of thing. And so they put it on mine. So it's something, if you're doing crypto on your phone, it's something that you might want to think about doing, is calling your carrier and putting a SIM card lock on your account. So anyway,
or even better, don't use SMS as your 2FA. Use a physical hardware key. as a 2FA.
Oh no, absolutely. But I mean, the more barriers and the more hurdles that you put in front of malicious actors, they're going to go to the easier targets. Crime usually goes for the soft targets. They're not going to spend a whole lot of time unless they know there's a big payoff. So yeah, that's just my
Yeah,
two cents.
I would say use a YubiKey. Use a physical hardware key
Yeah,
to log into your accounts, all of them.
yeah,
And so the way that I think about security, Mike, is that I just assume that my passwords and my devices are
are
compromised.
compromised.
I
Yeah,
just assume that they're all compromised. And so that means that in order for me to log into anything, I have to go through a couple layers of security. And number one, I've got to use that hardware key. So it's working.
I use a biometric lock, and I have to take a dick pic to unlock.
Damn, bro, a dick pic? That's a new one. What if someone forges your dick pic, dude?
Well, they'd have to know what it looks like. And just so you know, it's very small. It's unflattering. So
It's so small. It's just so
it's
small.
it's very small.
It's a bit small.
It's a very small. All right.
Oh,
So yeah, this is the new homepage. All you got to do is you can start watching live now. You can find your starting point. This is something that I thought was cool. Is it just asks a quick 3 questions? Are you totally new to crypto? Do you own some crypto on an exchange? Do you use DeFi apps regularly, or you trade, do LPs, and farm actively? So say you're totally new. What do you want most in the next 90 days? Understand the fundamentals of safety, a daily edge on markets I care about, a structured program with live calls, or a personal guide.
I forgot to put the make $10 million part in there.
Oh, yeah, win
But
Lambo. Win Lambo.
yeah, when Lambo. Yeah.
Yeah. And then how much time do you invest weekly? And let's just, I'm just going to go with the minimum on everything. And then it tells you, free, DeFi high school. So basically just, you can go ahead and you can start, and there you go. And you can start the courses. Like I said, there's no tricks. There's no hoops you have to jump through. You can just start this at no charge. It's like, I'm
it's gonna
not
give
even
you
logged in.
right. No, you don't even have to create an account, and it's going to give you a different route depending on the answers that you give to the questionnaire.
Oh, exactly. So like if I would have picked, like that I wanted a personal guide or coach, then it probably would have presented you with, David's coaching course.
Sure. And then pretty soon, Mike, when you've got coaching up there, we'll be able to build that into the thing too.
Oh yeah, like I said, I've been waiting until we get all the AI agents going and get the website up and going, and I've been working on my coaching program, but I don't want to be freaking shoveling more work on your plate until we get some stuff off the plate. All right, so log in. I'll hurry and log in real quick. There we go. You can see that this switched to account, so you know that that I'm logged in. So now if I go to the newsletter, so
Okay, so now that you see where it says account, Mike, can you
yep.
go ahead and click on account and then just make sure to sign in here. I think maybe the sign in. Try again. I'm still debugging this. It was working without any delay last night, but I don't know if the commit actually worked.
There we go. It finally worked.
Okay. Yeah.
So this is what it looks like when you sign in. So right now, I don't have access to the newsletter.
Yeah, it's not quite active for your email address yet.
Yeah. So, but this is where you would find everything. So you get your overview. You can go to the store. You can go to the courses. This shows all your orders. Like if you purchased anything as far as the coaching, or if you bought any merch or books, if you paid for the newsletter, this shows your history. This is where you can once you subscribe, this is where you can generate your newsletter. You can do it up to twice a day, and again, you can choose the assets that you want the newsletter generated for. So we don't choose the assets. You can choose whatever stocks, whatever commodities, whatever crypto. that you are interested in that's in your portfolio and generate a custom newsletter. And it's going to give you trading ranges. It's going to give you social media posts with links. It's going to give you liquidity pool ranges if you want to, get in the DeFi positions with your assets, and it's going to give you news. So news headlines with links to the articles. So basically, if you generate the newsletter, it takes about 5 minutes because I mean it isn't like pre-made; it's custom. So it takes a minute to go out and find all the information. So if you hit generate, go make your cup of coffee, go make your tea. By the time you come back, it's ready. While you enjoy your tea or your coffee, you can get 5-10 minutes. You can get caught up on your portfolio and what's going on each day, and it's 66 cents a day, $20 a month. I mean, it's what is your time worth? I know it takes me about an hour, hour and a half each morning just to get up to speed on what's going on in the market.
So Mike, do you want to see what the thing looks like?
Please, I would love to.
Okay, check it out because I've got it running right now. And here we go. So here it is. This is, if I just go ahead and zoom out a little bit. So this is the overview. This is the account page. I've got the newsletter active. If I click on newsletter, you can see the assets that I selected. And I also set it up so that it shows you the progress as it's generating.
I love
Yeah, so it goes 1 percentage point at a time. It shows you what it's up to, and then you can see the report that I generated, earlier yesterday. You can see the ranges, some on-chain flows, on-chain metrics for a handful of assets that I selected to get a report on.
Glad you got XRP in there because it's
I know.
Things.
So, just kind of interesting stuff. It's not pulling all of the data yet, like the derivative stuff. It's not pulling the big story. It's having a tough time writing the X feed. I need to make sure that I get the API key set up there properly. Quick hits and the node take isn't generating yet. So, and also the managed.
So we don't. I need to change up my elevator pitch. It looks like we don't do liquidity pool ranges anymore.
So the liquidity pool ranges are right here.
Okay. Oh, there you go. There you go.
Yep. And
so you got trading ranges and you got liquidity pool ranges. All right.
Yeah. So I can actually set this up to be LP ranges based on volatility, but haven't done that. And so this part just need to make sure that everything is working here. It's really, really close. It's really, really close. So yeah, man, that's what it looks like here. But if you click on the newsletter page itself, you could go to your dashboard, which is just going to, be the dashboard where you can generate the newsletter. So that's pretty cool. If I go back to the newsletter tab here and then scroll down, you could get a free sample. I don't think that this actually works yet. I don't think it's actually set up with the API to send emails yet. So still working on that there. And if you scroll down here, the generate a live demo, I don't think that's working yet. I think I'm just going to get rid of this in favor of, the free sample.
I think that would definitely be better.
And then that's the newsletter. So go to your dashboard and you can see what's going on in markets a couple times a day. So pretty cool.
It's freaking beautiful. So other than that, of course you got courses, so you can browse courses. And again, this is no cost. The store, it shows your orders and it shows your payments. But if you want to click on community, you can join a DeFi University and get in on the live. So David does daily live calls that you can get in on. Aside from the free courses, it's if you're looking for a community of mentors. So like Lou that's in the chat right now, I know that he's a member of your community, and there's a couple of other people that usually pop in our chat, and they are all successful DeFi investors. And so if you're looking for somebody that kind of matches your your risk profile and kind of your style of investing, or somebody that's accomplished a level that you're wishing to accomplish. If you're just looking to earn some extra money, maybe you're going to gravitate towards one person. If you're wondering when Lambo and you're wanting a yacht and you're wanting a mansion, you're wanting the big payoff, then you might want to find somebody that matches that, because that's if you want to be successful at anything, find somebody that's accomplished what it is that you're trying to accomplish and do whatever you have to do to align yourself with them. That's really the secret to success. It's going to
Yeah,
help you get much quicker from A to B than, stumbling around in the dark trying to figure out stuff that somebody else already figured out.
100%. It's basically like, finding a mentor who's going to show you what to avoid.
Yeah.
That's in this space. You've got to know what to not do.
Yeah.
And yeah,
It's
so
actually more important to know what to not do than what to do.
yeah, I kind of think so. Yeah.
And then, of course, you can join our Discord. And another, no charge. And I know a lot of people charge for their Discord. Ours is wide open. You can join. We're always in there. I know I'm active in there. Anytime I'm awake. If I'm sitting in front of my computer, I actually have it up on my third monitor here. And anytime anybody has a question, our community members, we have Scotty D and Ellie and Jay and a bunch of people in there, and we're there to help you answer questions. When this Aave thing happened, this will be our segue into the news. When Aave happened, we had a bunch of people in there that was like, oh shit, I have ETH that has been frozen. Does anybody know a way to get out? And so I went to work and found some ways that potentially they could get their liquidity out and posted those in our Discord. And I'm like, do your own research, but it looks like this is what some people are doing. It looked like that you had to take a haircut of about 2.2%. But I'm like, if you want to get your liquidity out, 2.2% isn't bad. So, again, it's like that's what we're here for. Ultimately, we just want to give good, solid information so that you can make the best choices possible when you're investing in crypto, DeFi, TradFi. And if you want to, accelerate your, learning, and if you want to accelerate, your path to success, then yes, we do have paid services.
You should
But
go to the Leering Center. That's where you
or
go.
you go to the Leering Center. The
Mhm.
Leering Center is
Yeah.
very important. All right. So let's get into some news. So we have, it looks like QCAD stablecoin goes live on Kraken in a major milestone for compliant digital assets. Stablecorp's QCAD, a Canadian dollar-backed stablecoin, is now officially trading on Kraken. So the impact of this is Canada's first fully compliant Canadian-backed stablecoin to hit a major global exchange. It reinforces the trend of regulated digital asset rails, bridging traditional finance, TradFi, and DeFi. So this is something this is the first I heard about this before I started digging into this. I mean, are you up to speed on this, David?
So, whenever I think about filthy, filthy fiat on chain, what I think about is how can I borrow in that asset? It's one thing if there's a Canadian dollar on chain, okay, great. But if I could borrow, in CAD terms, then that is what creates the opportunity for all sorts of different statistical arbitrage and potentially interest rate arbitrage plays too. So I was thinking about that with the
Or if somebody's into FX markets.
right, right. Well, that's the whole point,
Yeah.
because if I can borrow that QCAD token, let's say that I've got maybe I put up USDC as collateral on a money market, and we're going to have to stop talking about Aave because it's just Aave kind of shot themselves in the foot, man. And I think that it might end up being something more like they shot themselves in the head because the reputational damage, man, that is tough to recover from.
Well,
So
Morpho's looking better and better.
Morpho looks pretty good now. Morpho looks pretty good. I think I might have to go over to Morpho. So let's say that I'm on Morpho and I deposit some USDC as collateral. If I borrow CAD, this QCAD against it, then essentially what I'm expressing is long USD, short CAD. And now if I borrow that CAD and I immediately swap it for USDC, then that's a short position. So I could express a bearish bias in the Canadian dollar if I wanted to, but I have to be able to borrow it. So just having the CAD token on chain, that's great. But once it becomes composable in DeFi money markets, then you can do some really cool stuff with it. That's what I wanted to do with the yen, because the yen, I mean, look, the direction of all of these currencies is to inflate away ad infinitum, basically, like to infinity.
Yeah.
So if they're going to inflate away, my thought is, okay, well, which ones are likely to inflate away fastest? And I think the yen is likely to inflate away fastest. Outside of like, if we're talking about like, the
The
real,
Zimbabwe dollar.
yeah, exactly, the real shit coins of the
Yeah,
fiat
yeah.
world. But if we're talking about the yen, have you seen that JPYC token? So JPYC is like an official Japanese yen stablecoin.
Yeah.
And what I was trying to figure out how to do is, where is that token composable? Like, where can I borrow it in a DeFi money market? Because the moment that you can do something like that, you can put up Bitcoin as collateral, borrow yen, and then all of a sudden you're long Bitcoin in yen terms. And so that's a really powerful trade, because if you take a look at Bitcoin in dollar terms, yeah, it put in fresh all-time highs this cycle. But Bitcoin in yen terms, like if I just take a look at like Bitcoin in yen terms. Let me just do that real quick. I'm just
Yeah.
curious to see
Pull it up.
what that
I'll bring
chart looks like, because
screen.
let me just check this out real quick. Depending on the currency that you have priced your Bitcoin in, if we just go like BTC forward slash what is it going to be? It's going to be JP JPY, JPY, or maybe I could just do it in JPY USD. Okay, so if I'm long Bitcoin, short dollars, and short dollars, long dollars, then I'm long Bitcoin, short yen. Okay, perfect. So this is Bitcoin in Japanese yen terms. And now if I zoom out to a weekly, now, okay, there's the all-time high. But what you'll notice is that if I overlay on top of this just, the chart of Bitcoin in dollar terms, they're not identical. They're very close, but they're not perfectly identical. I don't know if you can really see that here. Let me see if I can change the color
No,
of this.
I mean, it's like freaking almost perfectly overlaid.
Yeah, it's almost perfect, but it's not quite perfect. So, notice back here in 2021, when in dollar terms, Bitcoin was ripping. Notice the candlestick chart, that's yen. That's Bitcoin in yen terms. So
Yeah.
Bitcoin didn't quite rally as hard last cycle in yen as it did in dollars. And back here, in December of 2024, that big rally, Bitcoin in yen terms rallied harder than it did in dollar terms. And here they've been pretty positively correlated. But recently, during this recent rally, this bear market rally that we're getting out of Bitcoin here, Bitcoin in yen terms has rallied by a greater percentage amount than it has in dollar terms. And so the way that you take advantage of all this stuff is you need to be able to borrow yen, or borrow CAD, or borrow whatever filthy fiat shitcoin you want to borrow, because depending on how that fiat shitcoin is performing against the dollar, if you supply Bitcoin collateral and borrow that fiat stablecoin against it, and that fiat stablecoin underperforms the dollar, then your long Bitcoin, short stablecoin position will outperform. So that's just kind of the way that I think about it whenever I see these staples launching on chain. Like this QCAD on Kraken, I guess. Um, Great. That just means more opportunities for us to set up interesting trades in DeFi. I love it. It's great, man. It's really great. And so this is the regulation here in Canada. They call it Canada's first compliant value referenced crypto asset. Like, dude, this stuff, it's just all made up. It's all made up. It's completely arbitrary. It's all made up. And, it's literally just some regulators sitting in a room somewhere making up these terms. It says the backing is held in reserve assets with the QCAD Digital Trust to ensure redemptions. And it's multi chain on Ethereum, on Solana, and for some reason also on Algorand and Stellar. Okay, great, cool. And yeah, it's developed by Stable Corp, nameless corporation, in partnership with DeFi Technologies Corp. Just like, okay, great, great. Thank you, Canada. So it looks like you've got a couple of direct trading pairs over on Kraken. You've got, QCAD in Bitcoin terms, or Bitcoin in QCAD terms. You've got Ethereum in QCAD terms. And that's pretty cool. The only problem is that you're on Kraken. That's the problem. Being on a regulated centralized exchange is no different than operating just like in a traditional bank account. They're the same thing. So it's just you have the illusion of being in crypto when you're on a centralized exchange because they allow you to get exposure and trade digital assets,
Mm.
but you're not. You're not. You're
No,
basically in a TradFi bank.
yeah, I mean, you're basically like we always talk about in a centralized exchange. It's an IOU. It's basically we promise that that you own this. Whereas we've seen when these exchanges go down, you don't own anything. So that's why we are such huge proponents of DeFi and self custody, is because we don't want anybody out there to get burned, like even Aave. I mean, shit. They're DeFi, and people's ETH got freaking taken because it's custodial. It's important that and you can still be. And correct me if I'm wrong, but if you hold one of these wrapped versions of ETH, potentially even with self custody, if all of the markets are locked down to where you can't swap out of it, basically you're forced to hold a token that potentially is going to go to zero, go to nothing,
Yeah.
because nobody's going to accept it, because like in this case, somebody minted a bunch of fake, freaking ETH, and kind of the rsETH, and then started swapping it into other things. So it gets real messy, and this is why there's high reward right now. Is we're early in this technology, and we're taking more risk, and so more risk equals potentially more reward. As this gets safer, as this environment gets safer, and more liquidity enters the market, I honestly see a lot of the yields going down, and it probably going to get to more to the levels of traditional finance. To be honest,
So think about this though. Risk was mispriced on Aave prior to the exploit of Layer Zero and Kelp DAO, because if you were supplying ETH or USDC or USDT or many other stablecoins on Aave, and you were earning like maybe 2.5 or 3.5%. Okay, those are treasury type yields, but you were not taking treasury type risk, even though treasuries are toxic sludge and return free risk and dog doo doo. If you're operating on what was referred to as the safest money market in DeFi up until a couple days ago, but you're only earning 3.5 points on your stablecoin, what type of risk were you taking? You were taking a lot of risk. You were taking a lot of hidden risk without realizing it and
yeah,
not being compensated for taking that risk at all. So
yeah,
3.5 points did not justify the smart contract risk, the protocol risk, the counterparty risk. You weren't getting paid enough. And so as we started to report, Mike, about 2 weeks ago on the problems with Aave, we started reporting on it well before that actually. But
yeah,
I was lucky that I got all my everything off of Aave in the nick of time, because it just, when you really think about it, it's like, okay, well, if I'm getting paid 3.5% APY, but I've got to take on all of this risk, is that worth the squeeze? The answer was no, not
no.
worth it at all. Yeah,
I mean
yeah.
that's what we're talking about when it comes to like some of these tokens and their staking and things like that. If I'm going to earn 3 to 5%, investing in a speculative asset, that the tokenomics, just you have to look at each one individually, but the tokenomics are such that there isn't a clear way for me to profit from the success of the company. And some of them don't even have staking. It's like I always use XRP. There's not a whole lot of DeFi opportunities for XRP to really earn anything of note,
There
and
aren't any.
nothing in the tokenomics, no matter how successful Ripple is, that is directly correlated to the price of the token. So that as well as DAG and some other ones are why I've gotten out of those projects. I think that the technology, DAG is a great technology. And especially like as it relates to AI. I know that you and Dagnum were talking about because we got a couple of things wrong about his background and stuff like that, and so we got on the topic of conversation of these AIs when they give information. DAG was a great way. Actually, refresh my memory. I remember you guys were talking about a way that technology could be used for verifiable data.
I mean, like, I didn't really understand what the hell he was talking about, if I'm completely honest, bro.
Oh,
Like,
okay.
I thought that the like at a high level, it kind of makes sense,
Mm.
but dude, like I was having this conversation with a guy yesterday, last night, actually, talking about like the top 100 digital assets, and there is so much garbage. Like, and DAG is just an example of garbage. Like it's really frustrating when people describe the technology in terms that makes it difficult to understand.
That
And then there's a token that really isn't connected to that tech at all. And if that company generates any revenue whatsoever, there is no mechanism by which token holders benefit from that. So like the DAG token, I think is garbage, number one. But number two, the protocol itself, like, okay, it sounds kind of interesting when you talk at high level terms about, oh yeah, privacy and adoption by the
always
military.
very
I'm skeptical, man. I'm
well,
very skeptical of
whenever
it.
people can't put things in simple terms, and not to say that I don't understand when people speak in more complex terms. Sometimes I don't. I'm definitely not super techie like some people, but if they fail to be able to convey a simple message in a simple way, then it makes my red flags start to go up. When they
Right.
start to speak too complex and use a lot of big techie words, I look at it as like word salad, where I'm going
Yep.
to dazzle you with a lot of a lot of this verbiage to confuse you, so that you basically don't understand that this is all bullshit.
Yeah. Yeah. And that's, I mean, I don't really want to talk shit, but at the same time, I kind of want to be honest. That's how I felt. I felt like I felt like I was just kind of like being bullshitted, bro. If I'm being completely honest. So yeah, I mean, seems like Dagnum is a friendly guy, but dude, honestly, like, no, no, thank you, no, thank you to the Dag token at all. I'll
Well,
pass.
and not just to pick on that token. I mean, this is true of, like you were saying, probably 95% of the tokens out there. This market has been speculative, up until recently, with real adoption going on. Like with networks like Canton. It's still new. Again, not saying run out and buy it. It's still speculative, but the adoption, like real adoption, is off the charts. I mean, daily, you have new institutions and banks going live, and I mean, it's insane. But a lot of these, like Polkadot, is going to be the future, and all these different projects that were supposed to be, Cardano, Ada was going to be the future, and the XRP was going to change how cross border remittances were done, and it was going to be the rails of the future financial system. All these narratives that we heard for so long, and none of them. came to pass. And we really need to start treating these investments like a traditional investment. Is they're not securities, first of all, so that works against us actually. The whole XRP is not a security thing actually for retail was I in a lot of ways not a good thing because we don't have a legal vested interest. There's no contract between XRP holders and Ripple, and we need to understand what that actually means because we were told that this was a victory for token holders and it was going to go to the moon after that judgment, and it did not. And
It
the
was a
reason,
victory for Ripple Labs.
a huge victory, because now they have no legal obligation to token holders. They can sell and fund operations with token sales, and there's nothing illegal about it.
Yeah.
So we need to understand this about these projects we invest in and ensure that we're investing in projects that there is a direct correlation. And they put it very simply. And when we had Shaw on with Canton Network, he explained it very simply. Is
That was a whole different type of conversation. You see, when someone is out there and they're willing to talk to anyone about their project that they've created and they've got real adoption and they can describe their project in simple terms so that you can actually understand what the hell they're talking about, it's
yes,
completely different. And that type of conversation I'd like to have more of, because I mean, look, it Canton, now that I understand it quite a bit better as a result of talking to Shaw and also performing a lot of research on my own, um, it makes me wonder if the public chains like Ethereum are going to be able to compete with the private walled gardens that are onboarding institutional capital right now, like Canton and Connexus. Because institutions and even large traders don't want their trades to be public. In fact, they can't allow their trades to be public. It must be private. Now, there's a difference between privacy and secrecy. A secret is something you don't want anyone to know ever. Privacy is selectively revealing information. And that's a hell of a lot different than public stuff. So yeah, no, I really like Canton. I really like Canton. And you see what Not Scoop Boy said in the
yeah.
chat
He
there
wants
about
to do a deep
bullish
dive on Tau.
bullish on Tau?
Maybe we'll do
Sure.
that tomorrow.
Sure, we could do that.
So yeah, I mean, it's Shaw put it very simply. He's like, there's no guarantee that the token's going to go up, and that was very refreshing to hear. He said that basically the way that the token could go up is through their mint burn mechanism and equilibrium. So as the network is adopted and used more, 100% of the fees, because they didn't keep any of the token, all the tokens went out into circulation. All the minted tokens get minted to the validators and the people that are building and that are the infrastructure of the network. And and then they have to, people that use the network have to pay fees. Those fees are burned. And as soon as the network usage exceeds the mint, then you pass that equilibrium point, then it becomes deflationary. So less and less tokens are out in circulation that potentially, not guaranteed, can send the price up. Very simple. He was able to articulate that. And if you're a part of a project, you've done your elevator pitch. I mean, to nauseum. I mean, you should have your elevator pitch refined to a point to where you can just rattle it off without even thinking about it. So
Yeah, yeah. So I was at an in-person event and a couple of weeks ago, and I was learning about Fedi, and Fedi is federated blockchain nodes. Like you can basically create a federation where you and a handful of other people control like a community's Bitcoin. It's a reasonable idea, but the implementation of it is horrible because it's much too difficult to set up. It's not simple, and I was asking the guy who came to present to us, like, can you describe Fedi to me in one sentence? And he couldn't. he couldn't describe it even in a sentence. And it's
Yeah.
like, this is the guy who works for Fetty,
Yeah.
who, is like the educator for Fetty. And it's like, Fetty in one sentence, Fetty is federated minting of eCash tokens for a small community of Bitcoin holders.
Mm.
That's basically what it is. Now, what in the hell does that mean? Like, what does that actually mean?
Yeah.
And then, like, how do you set that up? So this is really the problem with blockchain technology and a lot of these projects, just like writ large at a high level, is that the shit is too complex and people don't care about the tech. They don't.
No,
Yeah.
and that's why it's so important to be able to articulate why people, if you want people to buy the token, you need to be able to articulate why should I buy the token. I mean, that is like almost number one. No matter how sexy your tech is, um, it's if you want people to buy your token. If you don't care if people buy your token, that's one thing. But if you want people to buy your token, you should be able to do the value proposition. I mean, it's a part of investing. It's a part of business. It's a very simple concept. Why should I give you my money?
Yeah,
Elevator pitch.
100%.
Go.
And what's the value proposition? What's the pain point? What are you solving for?
Yes.
Like, why does this exist in the first place? Like, who is this even for?
Do you have proof of concept? Like, are
Yeah.
you just hoping that you're going to be able to build something? Where are you at in the process? Have you launched your product? Do you have existing customers? Are they paying you in some way to where your company is generating revenue and is profitable? Or are you just selling the tokens that you kept and using that to fund operations like XRP and Ripple?
And so, Mike, this is just like basic business 101 type stuff. But you know what companies, these DeFi protocols, these crypto projects, you know what they do to get around all that is they use a lot of buzzwords, and then they'll make things overly
Word salad.
complex, right? So that like the average Joe really can't make heads or tails of it.
I,
And,
I
yeah,
wish I could find that video clip of the guy. Like it looks like it was from like the 90s or something.
forget
He's
about it. Yeah,
no, no,
just forget it.
he's in this big server room, and he's
Mm.
talking about he's like basically using nonsense words, but it sounds like super technical. He's like
Oh my God. Yeah.
the transducer of the flux capacitors,
Yes.
correlate in
Yeah.
such a way, and they just like going on, and it's basically nonsense. But
Yes.
it's what a lot of these crypto projects sound like. The flux capacitor, if it falls out of alignment, that it can't properly transduce the magnetic fields. And it's just like what? It's I just don't get it.
No, but well, because that's what it's designed to do.
Yeah,
It's designed to fool you. It's this language that is designed to make you think, oh, well, I don't understand this. And so that means it must be super, super smart. And I
yeah,
gotta buy it
it's
because
super high level,
it's
super high
super
level.
super high level. Don't worry about it. Forget about it. It's
It's
a
like
high level.
hey, hey.
And then that's why, Mike, whenever we see these buzzwords, it's like, oh, red
Yeah,
flag, because
no,
like, it,
honestly, and I think we've, I mean, not to pat ourselves on the back, but I think we've done a great job with sniffing out a lot of mines, in a minefield. Aave, Rave, a bunch of other projects. XRP. There's a bunch of stuff that we've talked about that has come to pass. So I mean, obviously, I mean, we don't have a crystal ball, but if you navigate and you're able to miss 90% of the mines, that definitely better than running through a minefield with a ball peen hammer hitting the ground.
so check it out. This is how simple you should be able to describe something such that anyone can understand what it is. What is Bitcoin? It's decentralized digital money. That was 3 words.
Yeah.
That's it. Decentralized digital money. That's it. Doesn't
And
require
they ask what decentralized is. It's just it's not controlled by any organization, entity, or individual. It's spread across you know
around
thousands.
the entire planet.
Yeah,
Yeah. Yeah, thousands and thousands of nodes.
That's how simple the explanation should be. You
Right.
shouldn't need a PhD to understand the simple concept of how your token works, and why somebody should be interested in it, or adopt the technology. It's I learned this in the military as an instructor, is you speak to the dumbest son of a bitch in the room, because if they understand it, everyone understands it. If you're only speaking to the top 1% that are like super smart, you're going to lose 99% of your audience. It's a simple concept for public speaking. And again, if you are the customer facing or the retail facing aspect of your project, you should be able to simply articulate how your project works, like David was talking about, the value proposition. What pain point are you addressing? What is your customer base? What revenue are you generating? These are all things, like I've sat in boardrooms with like high level executives from Mastercard. The VPs of basically the VP of Mastercard, when I was doing operations for a tech company, for a Bluetooth mesh network company. And every VC and every organization we sat down with, it was almost like a checklist of the things that they asked, and it's all the things that we're talking about. Is why should I invest money in your company? Why should we adopt your technology? Who has adopted your technology, and how is that going? What is the pain point that you're addressing? Are you currently generating revenue? Do you have a proof of concept? If you have people that have adopted the technology, obviously you have proof of concept. But these are all very simple questions that you should have very simple answers to. And if you start tap dancing when they start asking these questions, red flags go off, and they're going to start digging deeper, and they're going to start burrowing in and asking probing questions, and they're going to find whatever it is you're trying to hide.
Yeah. Yeah.
What
Well, I
we
mean, I think a lot of these projects, Mike, they hide behind jargon and they
Yeah.
hide behind complex tech. And then when it blows up, they vanish. So, for me, it's really important.
And they get upset and they get offended when you start asking pointed questions.
And that's another big red flag too. Like
Yeah.
if someone can't sit and have a discussion with you and answer questions
Yep.
without like getting upset or like running away, then they're full of shit.
Yeah.
But a big thing for me is I've got to easily be able to find information about the protocol or project itself. And I've got to also easily be able to find information about the team members.
Oh shit.
Like if they make that stuff too difficult, then that's a huge red flag for me.
Well, let's hurry up and shift, because we're already. I didn't realize we're already an hour into the show.
Yeah, we've just been spitballing for a little while.
I'm so passionate about this because it's so important that people understand, and I like to try to always squeeze this into each episode, because it's so important that people understand this simple concept, to boil down and to put a pin in what we just got done talking about. Is we need to start treating these investments and these tokens like a traditional investment in a stock. And I know people don't like to hear that because these aren't securities, but you need to start treating them like they are. How does owning these tokens, what mechanisms in the tokenomics are going to contribute to you potentially profiting from the success of the company? Because if there isn't a way, you're buying a meme coin. So that's kind of the pin that we'll put.
And most of crypto is a meme coin
Yeah,
or vapor of some type.
yeah. It's there's very few. Tron. I actually just bought $200 of Tron just because I'm tired of waiting for that thing to go down. And we have some news on that as well. So it looks like the UK sets new rules for. You know what? Let's jump over here. Let's do a quick update on what's going on with Aave, because I know that you had some info, didn't you, David?
Well, I was just taking a look at the markets on Aave,
Well, let
and
me let me
Yeah.
give an update, and then you can give that update as well. But it looks like that both Aave and Compound have froze. So mirroring the panic on Aave, a proposal was submitted to Compound governance 10 hours ago to also freeze the wrap stake ETH market, their largest asset pool, to prevent contagion. The utilization rate for ETH on Compound has spiked to 96%, an unprecedented level that indicates a frantic exit. Major whales are aggressively deleveraging and exiting Compound to avoid getting trapped, as happened with Aave. And then this is the Tron news that I thought was interesting. So since our broadcast, on-chain data shows major actors scrambling to save their capital. Justin Soon, the Tron founder, just executed a series of complex transactions over the last 6 hours to withdraw 180 million from Compound, swap it for USDT, and bridge it to Tron. We can now confirm that while Soon managed an exit, smaller retail users are currently trapped in Aave and Compound. This confirms that the contagion has successfully created a two-tier liquidity event. So I'll leave it at that. So David, what do you got? And what are your thoughts on kind of the updates?
Yeah, so this is kind of like the Great Escape. This is the Aave Great Escape from April 18th to April 19th, and continuing yesterday and today. So if we're talking specifically about Justin Sun, what he did was he, exited Ethereum-based DeFi protocols and moved his capital back to the Tron ecosystem. And, look, I mean, you need to follow what these large investors do because they do this for a living. They've been very, very successful at what they do, and they tend to be the first movers. So, I mean, look, basically what he did was minutes before and during that freeze, wallets tagged as Justin Sun's wallets withdrew approximately $275 million in USDT and 53,000 ETH, approximately $126 million worth of ETH from Aave. And so the intent here is that, it looks like Justin Sun's ability to withdraw such large sums while other users were locked out suggests that there were highly automated risk-off triggers, or he had an informational advantage.
That's
So
possible.
that is definitely
Well,
possible.
we did we did report yesterday that there was a couple of organizations that potentially identified these issues that were exploited about the time that we were reporting. But they weren't reporting it. They were taking measures to deleverage their risk. They were getting their liquidity out, about the time that we were reporting it. Not saying that they like saw our show or something like that, but they noticed the things that we were noticing, and they got out, and much like David did because of what we found. We just found what they found, and they made sure they got out before the event took place. And not that they necessarily saw what was coming, that it was for sure coming. They just saw that it was a risk that they weren't willing to take. The issue with layer zero and that one to one exploit, where they did that denial of service to where basically blocked out all the different nodes except for the one or two that they had infected basically, and that allowed them to mint not basically ghost tokens, and then they were able to exit, use those ghost tokens to those rsETH tokens to swap out into other assets, and then I believe they put it through Tornado Cash to basically get away or abscond with that liquidity.
So what I was reading is that they also used Thorchain, that they
Okay,
also used
yeah, tell us about
Thorchain
that.
to exit. So, I put together some research on Thorchain, the architecture of the protocol and the mechanics of native cross-chain swaps. So I'm really interested to take a look at this piece of video content, Mike. I know that we've got plenty of time left until the end of the call today, but I want to see what this is like because I didn't realize that it was possible for there to be an atomic ETH to BTC swap. So that is pretty darn cool, and I want to learn more about that. You want to play this video content and take a look through the slide deck and learn
Oh,
about Thorchain?
absolutely.
Yeah, let's take a look at this, man. This will be great. I'm gonna go and as I hit play here, let me know if you can hear this because I got to get some more coffee. Yeah, you can hear it.
No.
Oh, okay, got it. Let me go ahead and stop that screen
Well,
share.
it didn't look like it was playing.
Yeah, it played for just a second, but I just want to make sure that my audio is shared here. And then let's try this again. Here we go.
Layer 1 blockchains operate in strict isolation. By design, a network like Bitcoin cannot natively read or interact with the state machine of Ethereum. The industry initially bridged this gap using centralized lock and mint mechanisms. Users lock their native assets in a source chain smart contract, and a synthetic, wrapped representation is minted on the destination chain. This creates a massive, centralized honeypot. If the bridge's contract is exploited, the native assets are drained, and the user is left holding an unbacked, worthless synthetic token. This matrix illustrates the flaw in hash time-locked contracts. A swap initiates, locking funds on both chains with a strict time lock. Holding the final key gives the initiator an unpaid call option. If market volatility causes an unfavorable exchange rate, they simply let the time lock expire. They trigger a refund, leaving the counterparty's capital unproductively locked. Centralized synthetics expose users to catastrophic honeypot risks, while time-locked atomic swaps suffer from severe capital inefficiency and griefing exploits. Neither architecture can securely scale enterprise-level cross-chain liquidity. Thorchain discards the peer-to-peer matching model entirely. Instead, it operates as an asynchronous, currency-neutral automated market maker. At its core, it is a replicated...
Okay. Asynchronous, currency-neutral, automated market maker. Got it. Asynchronous, currency-neutral, AMM. That's what, you see, we need, even though that's a lot of jargon,
Yeah,
it's
maybe we
not.
can simplify that a bit.
It's not. So there's a reason why this jargon exists because to be able to describe stuff like this, you need these terms, but people take advantage of it.
Like, what does acyclic mean?
Asynchronous just means, fucking A, man. What even does that word mean?
No, but I mean that's what we've been talking about. Is what being able to simplify this jargon.
I mean, it has to do with time and syncing stuff up. Asynchronous means without syncing. So let's see. I'm just getting a quick definition here from Gemini, and I just don't want to sound like a dumbass.
Oh, so, no. I mean, that's why we're here. I mean, there's a lot of times where
check this out, Mike. So synchronous means task A must finish and then task B starts. Asynchronous means task A starts, program moves to task B, task A finishes later and notifies the program. Okay, got it.
It looks like I think not Scoop Boy might have nailed it. So it's basically not at the same time, but it does it does have to validate.
I think so. I think that's a better way of putting it, for sure. So asynchronous.
So basically, they have to get what's that word? Not validation, but
consensus. Yeah,
consensus. So basically, like as it's doing what it doesn't need to do everything at the same time. But before it's validated or before it comes to consensus, everything has to line up.
Asynchronous, currency neutral, AMM. So that's the way that the research describes Thorchain. Asynchronous, currency neutral, AMM. And so, by the way, here's Thor Swap, just real quick, for anyone who wants to take a look at this. But this is pretty cool. This is pretty cool. And look, it says it's using near intents. That's interesting. So going directly from native ETH on mainnet to native BTC on Bitcoin's layer 1. That is pretty darn cool. Not gonna lie, that is really cool, especially since it's There's no KYC, AML, none of that. So I love that. All right, let's bring it on back to the video content.
State machine built on the Cosmos SDK, utilizing Tendermint Byzantine fault-tolerant consensus to function as a leaderless vault manager. The protocol is engineered to facilitate the permissionless exchange of native Layer 1 assets, trading actual Bitcoin for actual Ethereum, without ever issuing a synthetic equivalent.
Wow. Okay, that's a big deal. Trading native Bitcoin for native Ethereum without issuing a synthetic equivalent. So just think about this. If you've got WBTC, Mike, wrapped Bitcoin, that is, a fugazi. That's a fugazi, a fugazi. It's not real. It's just a made up token. And what you're essentially doing is you're trusting that custodian, and you're trusting the market's perception. You're trusting the market's perception in that custodian and token. Because if the market suddenly decides, hey, you know what, we don't think that this token is fully backed, or we just don't trust this token any longer, well, then you might be holding a bunch of WBTC on an Ethereum chain, but you might not be able to swap it at par for the equivalent, value in US dollar terms. So like you might get stuck holding the bag if you're not actually holding the real McCoy. Like you need the real thing. Yeah, man. So let's keep playing this.
By acting as a universal counterparty through deterministic liquidity pools and algorithmic pricing, the network guarantees execution. This neutralizes the specific execution risks and time-lock delays that made atomic swaps commercially unviable. This diagram maps the forensic life cycle of a native cross-chain swap. It begins when a user sends native Bitcoin to a Thorchain Asgard vault address currently operating on the Bitcoin network. Crucially, the user appends an OPE return script to this transaction. This native Bitcoin feature stores arbitrary data, allowing the user to embed specific routing instructions formatted for the state machine, such as the exact destination Ethereum address for the swap. Daemon clients called Bifrost observers run on every active Thor node. They continuously scan external Layer 1 mempools for these specific inbound transactions, extracting the raw metadata directly from the chain. To prevent manipulation by a single out-of-sync node, the internal state machine requires strict consensus. The deposit is only officially recognized after a supermajority, at least 67% of active nodes, independently verify the transaction and broadcast their observation. Once finalized, the state machine executes the trade internally.
So notice how much different that is than the way that Layer 0 got exploited, where Layer 0 had like a handful of nodes, but it was 1-for-1. And this, they need like, 2/3 of the nodes to come to consensus. Bitcoin is so much more secure than the EVM stuff because Bitcoin is like pure cryptography, and you've got to be brilliant to build on Bitcoin.
Well, and there's a trade-off. That's why it's slow.
Right. It is slow. It is slow.
But I mean, that's where what you've talked about before is, it's what is its use case? What is it being used for? Is security paramount? Is speed paramount? What is it that you need, from the network? Because you might not need a high level of security depending on what the use case is. Maybe you just need speed. Maybe you need very high security and you don't care about speed. It's
Yeah, I mean, it really does depend on what you're looking to achieve. But I think that in the coming months and years, I think that Bitcoin is likely to get an upgrade that would allow covenants, which are simply like the equivalent of smart contracts on Bitcoin. And I think it's not an if, I think it's a when that happens, I think Bitcoin's probably going to eat the lunch of most of the other public chains. So
across its continuous liquidity pools. Because Rune is the base settlement asset, the system performs a frictionless double swap. The inbound Bitcoin is traded for Rune, and in the exact same computational block, That rune is routed directly into the Ethereum pool to purchase native ETH. To protect these pools from value extraction by large volume trades, the protocol calculates execution costs using a liquidity-sensitive slip-based fee algorithm rather than a fixed percentage. The Bifrost protocol operates as a universal translator. It reads incompatible Layer 1 metadata and achieves internal consensus, entirely bypassing the need for complex smart contracts on the destination chain. Following the internal swap, the state machine calculates the final output and assigns the pending transaction to the Bifrost signer nodes for outbound execution. This graphic contrasts traditional multi-signature wallets with Thorchain's GG20 threshold signature scheme. Traditional multisigs explicitly reveal multiple signers on-chain and require chain-specific smart contract support to execute. Under the threshold signature scheme, no single node or database ever holds a complete private key. The nodes collaborate in an off-chain multi-party computation ceremony to generate a single valid cryptographic signature.
It said they participate in an off-chain ceremony. It's like you got a bunch of computers out there like chanting around a fire, performing a ceremony, and like
Getting married.
The ETH has landed.
The resulting transaction is mathematically indistinguishable from a standard single-user Layer 1 transfer. This signing architecture is divided into a dual-layer vault system. The primary Asgard vaults function as deep cold storage. Executing high-value outbound transactions from these vaults requires a full 67% supermajority ceremony across the entire network. To prevent this heavy cryptographic process from bottlenecking the network, secondary hot wallets known as Yggdrasil vaults handle high-frequency, low-value outbound swaps. These are managed independently by single active node operators to ensure rapid execution. This tiered vault architecture balances absolute cryptographic security for the vast majority of funds with the operational efficiency required to process high-throughput retail-level trading. Delegating millions in native assets to decentralized anonymous node operators poses an immediate security question. What prevents these operators from colluding to simply empty the Asgard and Yggdrasil vaults? This balance scale visualizes the deterministic economic model of the Rune token. It acts as the mathematical enforcer of network security through a strict 3-to-1 equilibrium. First, the liquidity equation. For every $1 equivalent of a native Layer 1 asset deposited into a continuous liquidity pool, exactly $1 equivalent of Rune must be deposited alongside it to balance the automated market maker. Second, the security equation. To protect against Sybil attacks and internal collusion, the node operators securing the vaults must mathematically outstake the value they hold. They are required to purchase and bond $2 of Rune for every dollar of pooled external assets. If a node operator mishandles or attempts to steal funds from their vault, the network triggers an automated slashing mechanism. It immediately destroys an amount of their bonded Rune equal to exactly 1.5 times the value of the missing external assets. This specific ratio ensures any attempt to drain the vaults results in a massive net financial loss for the attacker. The theft is economically self-defeating. Because cryptocurrency prices fluctuate constantly, maintaining an exact capitalization ratio of 67% bonded Rune to 33% pooled Rune requires active algorithmic intervention. The network controls this balance through an automated mechanism called the incentive pendulum, which continuously monitors the system state and redirects yield accordingly. If the network detects an underbonded state, meaning the vaults hold too much external value relative to the security bond, the pendulum shifts up to 100% of block emissions and swap fees directly to node operators. This high yield strongly incentivizes them to buy and bond more Rune, raising the security baseline. Conversely, in an overbonded state, capital is highly secure but unproductively locked without sufficient trading depth. The pendulum shifts maximum yield to liquidity providers, incentivizing users to deposit more external assets and deepen the pools. Through this dynamic reallocation of rewards, the pendulum applies continuous game-theoretic pressure, mathematically ensuring that the volume of foreign liquidity never scales beyond the protocol's cryptographic capacity to secure it. The ultimate architectural limit for this state machine is tested by integrating opaque, privacy-preserving ledgers, specifically Monero. This graphic compares a standard Bitcoin transaction with a Monero transaction. Bitcoin relies on highly visible metadata and generous script fields. Monero enforces total obfuscation through stealth addresses, ring confidential transactions, and CLSAG signatures, leaving only a highly restricted 8-byte metadata field. Monero mathematically hides the sender, it hides the receiver, and the exact transaction amount. These are the 3 exact variables the Bifrost protocol requires to calculate pool depth and execute internal state logic. Integrating this chain requires severe structural workarounds. Users are forced to hash their routing commands locally to fit into the restricted metadata limits, and they must delegate transparent addresses on alternative blockchains just to receive potential transaction refunds. Furthermore, bridging Monero's bespoke CLSAG signature scheme into a standard multi-party computation environment
What's that, Mike?
I said, there it is, bespoke.
Oh yeah, bespoke.
Bes-
demands entirely custom, heavily audited cryptography to ensure the threshold signatures remain mathematically sound. Accommodating true privacy architectures reveals a stark operational reality. Integrating non-standard, opaque ledgers demands massive, fragile customization, constantly threatening the simplicity of the core routing engine. Following a series of multi-million-dollar exploits during its early ChaosNet phase, ThorChain established a highly
Oh my god! Look at that shit.
You're like straight up flipping us off.
No, man, he just got rugged. You see that? This is one of the dudes who got rugged. He's working on his thing, you know.
early ChaosNet phase,
And then
ThorChain
boom.
established a highly specific response to operational complexity: systematic deprecation. The protocol first stripped away its impermanent loss protection mechanism. By passing a decentralized governance parameter, the network halted this feature, eliminating a massive open-ended liability that threatened to drain the protocol's reserves during extreme market volatility. This minimalism culminated in the complete Thor fee unwind. The network permanently removed its single-sided savers vaults and its zero-interest lending modules. While capital efficient, these synthetic yield products introduced complex accounting bugs. They created technical vectors for systemic insolvency that compromised the strict security baseline of the native automated market maker. In place of economic derivatives, the protocol installed draconian defensive layers. It implemented continuous algorithmic solvency checkers to verify external wallet balances and strict outbound throttling queues that artificially delay massive withdrawals to give node operators time to halt potential exploits. ThorChain secures billions in cross-chain volume by ruthlessly prioritizing foundational security over complex features. It sheds synthetic derivatives and theoretical hype.
What's that, Mike?
So this is what we've been, something I've been talking about on social media quite a bit on our X account is, and it sounds like, Rune, at least in part, has some in place, is automated. I mean, this is software, automated processes that monitor the network. And whenever, malicious, or potential malicious activity is detected, that it can take, preventative steps. It can, potentially, and I know that this goes against the whole decentralized thing, but, being able to, freeze or lock, and, and maybe, the fact that it isn't like an individual or an organization that has the authority to do it, that it's the software itself. But, being able to freeze or, being able to lock that wallet, to keep, to keep that exploit from occurring.
Yeah, I mean, we definitely need to dig into exactly how that is achieved in more detail, I would say.
Oh, no,
Um,
absolutely. But it just, from listening to this, it sounds like that Rune, at least in part, has, some, automated processes in place to, to prevent what happened, with that rsETH and stuff like that.
yeah, I mean, I certainly hope so. It does kind of sort of seem that way. Now, one thing that I would say about like freezing tokens is, I saw earlier today on Arbitrum that like I think it was like either 30 or 60 million dollars of ETH that was, part of this exploit on Arbitrum 1. was frozen by the Arbitrum 1 DAO. Okay,
That is.
now that's a problem for me. Like,
Mhm.
look, I'm all for, like, dude, look, I mean, you got exploited. There's no recovery, or at least I don't think that there should be recovery from that. So the fact that the Arbitrum DAO was able to unilaterally freeze this ETH, that's a
Yeah.
problem. That's a real problem. And they mentioned law enforcement in their statement on X. Which law enforcement are you talking about exactly? What jurisdiction? Where? Who has the authority to tell you to freeze this ETH? How did you know that it was the right ETH to freeze? Um, and just the fact that it can be frozen at all, like that's a problem, man. That's a real problem. So can ETH on mainnet be frozen? I don't think so. But the
And,
layer
and, and
twos,
well, and maybe that's a testament to the the native tokens, where you got to be just really careful with these wrapped synthetic versions of Bitcoin and Ethereum, and the native assets. Because I know that that's something that you've mentioned before, is that you prefer to own Bitcoin on Bitcoin mainnet, not wrapped
100%.
synthetic versions.
Because there's only one version of Bitcoin, and that is Bitcoin on the layer one, on
Well,
Bitcoin mainnet.
oh, exactly. And and these synthetic versions, the way that I understand is that that is where a lot of these exploits come from, is attacking these synthetic versions, not the native versions.
Yeah, yeah, it's definitely where we've seen a lot of exploits year to date. Um, but the big problem for me is this is supposed to be freedom money, and with freedom comes
Responsible.
real responsibility.
Yeah.
Exactly. And so, like, if you fuck up, I mean, that's horrible.
That's
But
Spider.
like,
With great power comes great responsibility.
it's like, hey, that's part of the game, man. You gotta be able to take your lumps sometimes. But like the fact that the layer twos, I think what people need to understand is that the layer twos are not the layer one. So ETH layer one, Ethereum layer one, I think much, much, much different than all of the layer twos. So and this incident just proves that. So here, Mike, let's finish watching this video, and then what I want to do is I want to actually use it. I want to use Thor
All right.
chain and see if I can execute a swap.
Yeah, we got about 30 minutes. Let's do this.
To operate exactly as engineered, an autonomous, self balancing state machine where absolute security over native assets is mathematically guaranteed.
Okay, great. Thank you for that, Notebook LM. Let's take a look at the slide deck just real quick. Let me just run through this so that we can see if maybe there's anything interesting here. Okay, so native BTC in, native ETH out. So this is the Thor chain paradigm. This is the idea. You've got, native layer one assets. You can swap native layer one assets. Permissionless exchange of native layer one assets. Zero synthetic equivalents, decentralized, asynchronous execution. Awesome.
Perfect.
Okay, cross-chain mechanisms matrix. Okay, so this is the HTLC atomic swaps. This is like, what happens, the hash time lock contracts. That's what happens on Bitcoin and Lightning. This is four-chain asynchronous swaps. They use automated liquidity pools that act as a universal counterparty. There's zero execution risk because it's guaranteed execution via these deterministic pricing algorithms. Capital efficiency is very high. It's chain agnostic because they use something called Bifrost. And the execution time, we're going to find out.
The right is their bridge.
Yeah, so we're gonna find out how long it takes too in a second. Okay, so you've got the Bifrost protocol translates incompatible state machines. So you've got the external data, Bitcoin, Ethereum, whatever, and then you've got
I've used Bifrost before.
yeah. So I've never used it either.
No. I have.
Oh, you have.
Yeah.
Cool.
It's been a minute, but I mean, it worked great. But I mean, I would love to see it live.
Yeah, me too. So we're going to do that in a second. Deterring liquidity extraction via slip-based fees. Okay. The deterministic economic engine. Okay, so the settlement asset. Now, Mike, wasn't there some big problem with the Rune token? Was that as a result of one of the exploits or failures that occurred? Because when I take a look at the token price, you know, I'm pretty sure that there was like a really big problem that happened with this thing.
Nothing comes to mind. I mean, here, I'll see if I can find anything.
Yeah, I thought that at some point last cycle that there was like a big exploit or something cratered or something happened for either like Thorchain or Rune, but I could be mistaken. So yeah, let me bring it back on over here to this slide deck. Okay, so it uses Rune to go from layer one asset to layer one asset. So essentially, atomically, you take your spot Bitcoin and swap it for Rune, and then that Rune is swapped for ETH, and then you receive that ETH, and it happens all in one block. So that's how they're able to execute these swaps at a super high level. Okay, awesome. And this is the 3-for-1 valuation scale and solvency. Okay, cool. Algorithmic incentive, overbonded and underbonded. This is what we were watching with that earlier. Anatomy of a native execution, Bitcoin to Ethereum. So initialization, the user sends 1 BTC, the OP return script holds the critical routing instruction. The AMM routes through the base pair. 1 BTC is swapped for Rune, instantaneously routing into the ETH Rune pool. And then the Bifrost signer utilizes the TSS supermajority MPC ceremony to withdraw and sign native ETH from the Asgard vault. Okay, awesome.
So
Perfect.
it looks like there's been 3 exploits that I've been able to drum up.
Right.
So
Yeah, there have
in
been.
June of 2021, July of 2021, and another one in July of 2021.
Yeah.
It looks like 2025, there was a suspension and an imbalance. It looks like in 2025, Thorchain as a was being used as a laundering hub. The Bybit exchange, the 1.4 billion breach, it looks like, while not an exploit of the protocol, Thorchain made headlines in February of 2025. The hackers suspected, again, the Lazarus group, used Thorchain to swap stolen ETH for native Bitcoin. Because Thorchain allows for native to native swaps without KYC or wrapped tokens, it became a primary tool for chain hopping to obscure the trail of stolen funds. This led to a major governance debate with the Thorchain community about whether the protocol should remain neutral or implement features to block illicit addresses.
No, remain neutral. Remain neutral. You know what the biggest, the biggest asset that is used to facilitate money laundering? It's cash. The U.S. dollar.
Yeah, yeah, by far.
Cash, by far.
That's why I always laugh when people try to say that crypto is like Elizabeth Warren, where it's used for illicit activities and money laundering. It's like, really.
Yeah, I mean, look,
Really?
Pocahontas is the ultimate Karen. She's the
It's
ultimate crypto
the
Karen.
dollar has entered the chat. The dollar has
Yeah,
entered.
I know. So, yeah, and it looks like they integrated Monero, which is great. The Monero cross-chain ecosystem matrix, love it. Evolution by pruning, the Thorify unwind. I want to use the protocol. Defense in depth, post chaos net security paradigm. So, Mike, you know what we can do on the website? So if I'm over here on the website here and we're just taking a look at this just real quick, what we can do is, how now that I've fixed the back end and you'll be able to hop into the admin side, what I want to be able to do with all this research that we produce during these live streams is I want to post it on the website, or at least have the links to the research that we go through on the
Absolutely.
website so that people can go through the slide decks and whatever else. That would be pretty cool.
No,
But
it'd be super cool. These deep dives that we do each episode, if people could go through them, on their own.
okay, so let's see if I can use this thing, right? I've got $20. I don't know if that'll be enough. I just want to see if I can go from $20 on base to and I want it in ETH on base. And then I want to see if I can go to native Bitcoin. I'll whip up I think I've got a hot wallet that I can send it to, but let's just see. Let's just see. So first things first, I just want to make sure that I've got some ETH just sitting in ETH in my wallet. So to do that, maybe can I use this to swap? I should be able to use this to swap.
Should.
So here, let me just connect. I'm going to connect my wallet on base. I agree to the terms. Okay, and I want to connect a browser wallet. And what I want to connect here is Ravvi. Maybe it's going to require that I select MetaMask. Sometimes to connect Ravvi, you have to select MetaMask. So let me just see. I don't know if that's going to do it. So I've never used this before. Let me hit reset.
This is good.
Instant wallets, hardware and key store, browser wallet, select, deselect. So I want to connect, let's just say on mainnet, and the browser wallet. So it says passkeys. So I don't want to use Trust Browser. No, I want to use MetaMask on mainnet. I wonder why it doesn't show me Ravvi. It shows me all these other crappy wallets, but it doesn't show me Ravvi.
Try selecting another chain and see if it pops up, or another network.
Let me turn on expert mode, set custom recipient. Okay, that's good. And then swap settings. This looks like the routing method. Yeah, it is. Okay, that's fine. I just want to be able to connect properly here. So select, that's fine. And then reset browser wallet. All I want to do is connect Ravvi. If it's not going to let me do that, then what I'll have to do is I will have to install Phantom, because MetaMask sucks. So I'll have to install Phantom so that I can actually use this.
No, MetaMask is terrible.
MetaMask is horrible, dude. So here, let me just go and grab Phantom wallet real quick. And then I'm just going to set up a hot wallet. And you know what? I should be able to actually import that hot wallet from Ravvi into Phantom just really quick so that we can do this. Phantom wallet. Let me just grab that real quick. Phantom.com is the URL. And I want to go ahead and install this thing on my computer. So let's see here. Download for desktop. I want to install this into Chrome. Let me get that extension. And then the next thing that I've got to do here, Mike, is I've got that hot wallet with 20 bucks on it in Ravvi. And all I need to do is grab my private key from this hot wallet. So to do that, I'm pretty sure that if I'm in Ravvi, I can just go into my settings here somewhere, and I should be able to export this key. So I'm over here in Ravvi, add custom network, about us. Okay, so where can I find the settings for that hot wallet? Think I should be able to do that. Okay, source, manage addresses under the seed phrase, add backup.
As this technology, not just Thorchain, but just blockchain technology, I think as it matures, there's going to be this like natural. We talk about the culling of a lot of these projects, but I think a lot of these methods to interact with these chains is also going to get pared down to where a lot of these wallets, because it's so confusing to figure out, okay, I want to use this bridge or I want to use this chain, and this wallet's the only one that supports it, so I gotta freaking transfer some of the tokens from this wallet to that wallet so I can interact with this bridge or this protocol. It's like this freaking weird roadmap. It's almost like the early internet before before Google,
And
where
bro,
you
honestly, you've got to be a really skilled, crypto and DeFi operator
yeah
to even be able to do this shit.
yeah
Without fucking up and losing your money.
that's what
So,
I'm talking about though. Is
yeah.
this is not usable for the average person. And that's one of the reasons, I'm just, kind of, filling the time a little bit while you do what you're doing.
So we're
But
ready to rock and roll. Yeah,
okay,
I got it all set up.
but that's why I'm bullish on Coinbase and the Base Network and Aerodrome and Morphos. It seems like they're making the biggest strides forward in eliminating these barriers to entry that don't require you to have a PhD in freaking crypto and wallets and DeFi to participate, and to deposit liquidity. But yeah, go ahead.
Dude, look at this shit. So if I'm using the Phantom wallet, I can only use it on mainnet. I can't use it on Base. If I want to go from Base, let me just uncheck all this shit. It's only saying passkeys. I don't even know what a passkey wallet is.
It's
So so I'm gonna have to go from mainnet to Bitcoin. That's really all I wanted. From
yeah,
the layer one to the layer one. So I'm
yeah.
gonna use Phantom and connect wallet. It says failed Phantom. An unexpected error occurred. If the issue persists, okay, so sometimes all you gotta do is refresh. Sometimes that's all you gotta do with this stuff is
Hence,
is refresh. So connect wallet, mainnet, instant wallets, detected wallets, Phantom. Thank you. Connect. Boom. Yes. That's what I'm talking about.
all right.
Okay, so we've got it connected. So I'm connected on Ethereum, and I've got some assets on mainnet, but not enough. So what I want to do here is, and I can't swap, I can't bridge between base and mainnet here on ThorSwap. So I got to head on over to Uniswap, and I'm just going to do this on Uniswap real quick. I'm going to connect this Phantom wallet, and all we're going to do here is we're going to take a look at this 30 bucks I've got in here, and we're going to
And
go.
I'm going to point out something real quick. Like the new Aerodrome. Again, and I know I'm kind of talking my bags here, but it's like single click feature, like all this bridging and all of the swapping and all all this different stuff that David's doing manually right now. The new Aerodrome platform is going to allow you to do a lot of this simply by selecting what asset that you want to use and what you want to swap it into. And it's automatically it's going to be like a Google of DeFi. And it's going to go out there and it's going to figure out, okay, what do I need to use to bridge this? What assets do I need to swap it into? It's going to map it all out. It's going to display it for you, let you know all the fees, that you're going to incur with doing what it is that you want to do. And then if you want to accept it, you one click and it does it automatically. That is the way that this technology it needs to operate. So again, that's the thing that makes me so so bullish on certain projects. And even though that a lot of them are very centralized, it like Base and Coinbase and things like that, it's just ease of use. I mean, that is what it boils down to, is adoption. What is going to draw the most adoption? And that's what adds value to software. That's what adds value, to these assets that we're investing in, is adoption. But sorry, go ahead.
Yeah, I was just taking a look down through my wallet, this hot wallet. Dude, I've got so many scam tokens in this thing. I didn't even realize it
No,
because
we were talking about that in the community yesterday. Is I had one where supposedly I had $4 billion in my wallet, and but they're scams. If you click on them, potentially there's exploits in them, and if you try to swap out of them or interact with them, they can drain your wallet. So do not interact with any token that you didn't buy or swap, or that you specifically did not, because nobody's going to just give you free tokens unless you're doing an airdrop or something. If something just shows up in your wallet, do not mess with it. One of our community members lost one of their aerodrome locks from interacting with a malicious ghost token.
Yeah, so I am just getting this all set up, and what I'm finding is that look, there are always certain quirks that these platforms have. So potentially one of the quirks is requiring that Phantom be open in the background. Okay, so it's continuing to fail. So when I get something like this, what I want to do is I want to just go back to the home page here. I want to hard refresh, and I want to just keep trying here, because I'm pretty sure that this will work. Huh. Well, I was connected a second ago. So let's do this. I'm going to go back and I'm just going to copy the URL. I'm going to stop the screen share. I'm going to close the tab. I'm going to open up a fresh tab. I'm going to go back to the website. Okay. And it's got it. So it's giving me an error. The website is erroring out. So thorswap.finance. It says I'm being rate limited. It says thorswap.finance has banned you from accessing this site. That's got to be bullshit. Okay, so let's see here. Let me just go back and let's see if I can try this one more time. So Mike, I'm right here. I'm going to share my screen again. And
Yep.
look, I mean, I do this for a living, and this stuff is not easy. Okay, like it's not working. So here's Gemini. I've got a couple of different options here. thorswap.finance. So here's the website. Okay, great. I'm back on Thorswap. Okay. Now, what I want to do is I want to connect my wallet on mainnet and Phantom and agree and Bitcoin and connect. So this is horrible. Network status, outbound, liquidity cap, funds cap reached limit.
Ellie's asking if they won't let you in Asgard. I think Asgard is another platform.
Yeah, I don't know. But it's telling me that I got rate limited. How the fuck did that happen?
Well,
So if I,
I mean, that's most of the stuff on Thor chain is like Viking themed. You got Bifrost, you got uh, you got Asgard. Everything is. So I mean, try looking up Asgard. See if you can use that.
it's just it's so strange that it won't even let me connect. So let's see, customize, show global stats, show charts. Because when I go to network status, it says liquidity cap. It says funds cap reached limit and outbound queue slow. So maybe those my liquidity provision connect wallet. So I wonder if it's okay. Look, it just allowed me to connect. Okay. So it allowed me to connect on the liquidity part on Thorchain, but I want to use the swap. So, okay, so now I'm connected. So it wouldn't allow me to connect on the swap page, but it allowed me to connect on the Thorchain deposit page. So you see what I was talking about with quirks with these things?
Yeah.
Like just really, really horrible user experience. Okay, so I'm going to swap $23 of ETH for $23 of Bitcoin.
You want to show that?
And oh, am I not? Oh crap. Oh crap, I was showing the wrong screen. Okay. so check this out, Mike. So right here on Thorswap, where it says Thorchain deposit, I
Yeah.
was able to connect my wallet here, no problem. But for whatever reason, on the swap page, it wouldn't allow me to connect my wallet. But now that I'm connected, it shows my wallet here. So, look, could that have been my browser? Could that have been a me problem? Possibly, maybe, don't know. Just kind of funky. Okay, so I'm connected. I've got 20 bucks of ETH, want to swap it for 20 bucks of BTC. And I think recipient address. So it says Thor name or recipient address. So that must be my BTC wallet address. Okay, so I think doesn't Phantom support spot Bitcoin? Can't
I
you?
do know.
I think it does. So if I want to receive, oh, maybe not. Maybe not. I thought that it did. I thought that Phantom Wallet did support spot Bitcoin. I might have to enable that in the features somewhere. Um, manage tokens. Okay, so I don't want to just manage tokens. What I really wanted to do was make sure that I can receive spot BTC.
This is a testament of how early we are to this technology.
Yeah, I mean, it just doesn't. It's not user friendly. That's really
No,
the only
the,
thing here.
the U and whenever people talk about the UI UX, this is what they're talking about: the user interface, user experience.
And look, so Mike, I just hit refresh on the Thor chain page here,
Yeah.
and it disconnected my wallet just by hitting refresh. So now I popped back over here to the deposit page. I connected my wallet, and so now I'm back connected on the swap page. But for some reason, it keeps erroring out on the swap page. Okay, so what I need to do next is I need to grab a Bitcoin wallet. So what's a good Bitcoin wallet, Mike? A non-custodial Bitcoin wallet that I can just install in my browser? There's a couple of them. There's Metaverse X, there's Leather, there's what are the best non-custodial BTC browser extension wallets? I think there's a couple of them. There's Metaverse, there's Leather, Xverse, that's the one. Xverse and Leather. Let's see, Unisat, OKX. Let's see, I think what I'm going to do here is I think I'm going to use Xverse. So give me a link to Xverse wallet. Okay. And then I'm just going to install that Xverse wallet real quick. And xverse.app, Chrome Web Store, Xverse. Go to the official website. Okay, and I'm getting this. Let me grab this for desktop real quick. And then once I've got this installed, then I'll be able to give my public wallet address or my receive address to ThorChain, to Thor Swap. And let's see here, create a new wallet. Okay, I do not authorize data collection. Backup later. It's just a hot wallet. So I just want to make sure that this works. I want to see this in action because, it's easy enough to go to something like Change Now and swap ETH for BTC. The entire reason why I want to take a look at Thor Swap and ThorChain is because the hackers, those North Korean hackers, are using this to launder their stolen proceeds. Okay, so now that I've got my Bitcoin wallet all set up, I'm going to hit max here. It's going to give me a quote, and then I'm going to paste in that address. So this is just the random hot wallet that I just set up here. Okay, and so here's Maya Chain streaming. And this is the recommended one, Harbor. Okay, so here's ThorChain streaming. Now, why is ThorChain streaming? It says it's going to take 10 minutes. It's going to take 10 minutes and it's going to cost $1. But if I use Maya Chain streaming, it says it's going to cost 15 cents and take the same amount of time. Now, I don't know anything about the difference between these, but of course, I'd like to spend the least amount possible. So I'm just going to go with the recommendation.
So Scoot's asking if you think that the connectivity issues are due to the recent exploit.
Could be. I mean, look, you see network status, outbound, it says queue busy. So I'm not sure if this refers to just the Thor chain or if this refers to, you see down here where it says Maya chain. Does that mean that Maya chain doesn't work? Or does that mean that just the Thor chain doesn't work?
I've never even heard of Maya.
Me neither. Okay, so price optimized, time optimized. So it looks like I can't do anything to speed up the time, and then price protection, slippage 3%. What the fuck? 3% slippage? That's crazy.
No rush, but we are out of time.
I know. So here, let's just execute the swap. Okay, so you see this going from native ETH to native BTC. It's giving me a pretty good slippage. The fee is minimal. The network fee is minimal also, although as a percentage of my liquidity, it's pretty high. Liquidity fee, exchange fee, there's my, oh, okay, yeah. So there's my address, memo X, min received, okay, perfect, confirm. And then it should ask me to sign this in Phantom. Okay, great, confirm. And there we go. Okay, so the swap, I've begun the swap, Mike. So in 10 minutes time, we should be able to see this. Yeah. So not always user friendly, but I think it'll end up working.
Still blowing in your eyes?
No, bro. I think I'm just becoming one of those evil Bond villains. It's just a matter of having blood drip out of my eye next.
Oh, there you go.
Dude, my tears aren't draining. They're not draining into my fucking eye duct. It's like infected or something. So I don't fucking know. So like it's basically just like I'm crying from my right eye all day. It's driving me insane. It started happening like 3 days ago. So I gotta go see if I can get some eye drops at the store or something.
Gotcha. All right. Well, let's see what we got going on to the rest of the day. It looks like today the next show is David and Ellie. David will be doing the market wrap up here in about 2 hours. And immediately after that, on the same show, he'll be doing his live coaching session with Ellie, who's in the chat. And tonight we have Crypto and Chill. So me and Jeff will be going live and just kind of chilling out and talking about what happened in crypto today and what happened over the.
Oh wow, Mike, it worked. It's done. Yeah, it's done. Right. And now in my wallet, I see that the Bitcoin is just confirming on chain. So that's.
It looks like they just need to work on their UX and UI then.
I mean, it was just a little bumpy along the way. First time ever using it,
Well, still, I mean, somebody with your knowledge, with your extensive knowledge, I mean, if you're, struggling and having that many bumps, imagine somebody like me or somebody who's never used freaking wallets or crypto and stuff is trying to figure this out. Imagine the freaking headache that would be for them. So, great, testament to, Thorchain with being able to swap from, native ETH to native Bitcoin on ETH, from ETH mainnet to Bitcoin mainnet. That's huge. I mean, that's awesome. But the UX UI looks like it could still use some work.
I think it could still use some work, but it worked. It worked.
Yeah. No, absolutely.
And,
absolutely.
Very, very cool. Very cool. Happy to see that.
Awesome. So so join David here in Ellie here in about 2 hours, and then about 3 hours after that, or 2 hours after that, myself and Jeff, and we'll try to give you some more good info and help you navigate these markets. So thanks for all that tuned in, and until next time, Veteran Crypto out.
Peace.